Hello and welcome to Stops Are In, my blog. My name is David. Today is the 15th of July. My last video I talked about gold getting ready to make a turn. I was thinking aloud and I was expecting gold to rise a little bit higher. But when I checked in this morning on freetradingvideos.com, my regular haunt and trading chat website, you should check it out, I was alerted to the fact that maybe my target for gold or GLD of $100 to $104 was perhaps a little bit aggressive. That initially produced, I have to be honest and say, a bit of confusion. I've been burned in the past doing what other people say. So, you know, I suppose you could say I fell in love with my own opinion. So what I decided to do was just watch and see what was happening. What I quickly figured out was that Bernanke was talking to the Senate Banking Committee today, and pretty soon I found myself watching an intraday chart, both a 15-minute and 60-minute chart. Bernanke started talking about upside risks to inflation intensifying. Now, I kind of take that as gibberish for I may have to raise rates. He seems to have abandoned the old speak about, you know, the only thing that's wrong with our economy is growth. Also, the producer prices come out today and they are rising astronomically. So this all kind of said to me, maybe now is the time, independent of what people in freetradingvideos.com were saying. So what I did was I opened up a chart. This is a 60-minute chart, and I drew this trend line in to represent our recent run up. And what I decided to do was not trade initially a bigger position as I had intended. I wanted to be able to have my stop a little bit wider. I kind of wanted to take a play on what was happening today and what my original plan was. I wasn't psychologically ready to alter my plan entirely. That kind of tells me don't fall in love with your plan, and maybe it also tells me to have more potential resistance areas drawn in instead of trying to predict exactly that one. Anyway, what I saw today when I did this chart, two things. I drew in this trend line. I saw we made a new high, but we had a bearish divergence on the MACD. The MACD on the 60-minute chart wasn't making a new high, and if I flip over to the daily, this to me is also bearish. Here's our MACD, it's about to roll over. We had at that point a new high. If we compare that to this high here, this I take as bearish. Coming back to the 60-minute chart, as soon as I saw this here, I was getting ready. I really was getting ready. I was starting to watch what was going on. If I put these two candles on the 60-minute chart together, that I take as a spinner. As soon as I saw us get into this area here, I said, right, that's it, I'm in. And I've entered GLD short at $96.75. We're still live. It's at $95.73 as we speak, so thankfully at the moment this trade is profitable. And if I flip over to the daily, what I can see again is that MACD confirming. We've now got this it's almost a gravestone candlestick, but look at the volume. The volume selling is huge. I'm going to make up my mind finally to stay in this trade just before the close of play today. Unexpectedly, USO has taken a bit of a tumble, so I'm at this point not sure whether USO and stocks going up, USO coming down, stocks going up has anything to do with this or not. I'm simply put not experienced enough, but at the moment I'm quite content to be in this trade. It's not as big as I wanted. That's going to allow me to keep a slightly wider stop loss. My suspicion is that I won't need that wide stop loss, but that's the way I've entered the trade. I've only been doing this about 6 months, so I'm very content with the way things have gone for me today.